Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 21st of February here on a Tuesday here in 2023 after the holiday. And the market's off 2%. The Russell was off 3%, which took the brunt of the sell side activity. Markets are digesting earnings. We had little split in earnings today. Right there is Home Depot. Home Depot shares are down 7% in today's session. That's our big retail name. But not to be outdone, another big retail name, Wal-Mart. Wal-Mart was up almost 1% in today's session. But a fun note before we start talking about all the red is the chocolate. There's one stock, two if you count Ingersoll Rand. But let's just for fun focus on Hershey. It's a delicious sweet chocolate making company, and they made new 52-week highs in today's session as their uptrend continues. That's on the weekly perspective, which is a strong stock getting stronger. And that's on the daily perspective. And we may need some sweets and chocolate to get us through today's session, which was again, 2% down day. Now enough about the chocolate, back to the market. In the S&P 500, we saw it decline by 2%, as did the Nasdaq, which is our technology-centric index. And the Dow mini futures, and Home Depot was a large part of the Dow's decline. Dow was off 700 points in today's session. And the big brunt was in the Russell, 3% to the downside. For the small cap technology index or small cap index, crude and gold down a little bit. We'll focus most of tonight's video on stocks, but just a quick market update. Oil continues to press toward lows, and gold is coming a little bit off those highs, and it continues a very long trading range seen on the weekly chart. But to me, the most interesting, or a key interesting fact about today's session, is that the bond market kept getting weaker. And that puts us back into this scenario where I describe it as the inflation pain train. And the inflation pain train, that's some of the digested market sentiment or market reports, economic reports that we have had the last few trading sessions. That was PPI, that was a big surprise to the downside, hotter or higher than expected, and of course CPI, and other economic reports, which shows inflation is not under control, and the Fed is going to have to be even more aggressive than expected. So we did have a rally up in the bond market. Let's start this with the yields, actually. We had a decline in yields when the premature all clear signal was given about inflation. And that meant the bond market, the bond yields, this is the 10-year Treasury note yield, pulled back. But I've been looking for it in prior videos to put a bull type of a rally from 3.4%, that moving average, that's a buy signal, all the way back to the prior high at about 3.9 or 3.95, just shy of 4%. That is what has occurred because inflation is not under control the way that they would like it, and the Fed is going to have to be a little bit more aggressive, raising rates a little bit higher than the benchmark. Benchmark will be 5.25 or 5.5. We may see that sooner rather than later. And that cast a bearish pall on the bond prices, which again, we've had a downside target, which was hit in today's session. Took it down from 109 to keep this downtrend in play. And in prior videos, I've discussed it as, will we see the same thing we saw in the earlier moments of 2022, or is this time different? As of this video, 2 or so weeks later, it's not different. And we are seeing the bond market push toward lows. Initial target just got hit in today's session near 100, and that's for TLT. In ZN, we're seeing it go down as well. The futures contract, ZN, the 10-year Treasury note, that is breaking the lows and probably on its path back to 2022 lows. ZB is going to be your 30-year Treasury note bond, and that again is back to lows, retesting that scene at the later part of 2022. All that goes together to a bearish downswing in the equity market. And looking from this as the SPX, our S&P 500, this is what confused me. We had a few days where the bond market was going down, but the stock market held its own. It stayed higher. And everything cracked last couple of trading sessions. So this makes more sense. And it's the this time is not different scenario. that inflation still is a concern. It was a concern in 2022. And similar conversations as, well, there's the bottom. Well, there's the bottom. And neither of those two were the bottom. So that's what we're looking at for the big picture, which goes well beyond what we talk about in the evening videos, which is just simply trade ideas and trade suggestions for the next few days, maybe the next few weeks. But it's important to note similarities to prior times where the downtrend was favored to continue, but the bulls, the buyers, pushed it a little bit further, a little bit higher, and made it a little bit more frustrating than we would have liked. And the end result was the same. And that's just starting for today's session in the down move. Looking across the board, other than Hershey's, not a lot, and Wal-Mart, and some of the energy stocks. So anything bullish today is a rare, small green speck in a sea of red being selling. So these are the stocks that were bullish, or at least up by the close of today's session. And the other side is multiple, many, far more stocks were on the downside. And this is a visual graph. That's the S&P 500. That's the S&P 100. The brunt of the selling took place again in the Russell being our small cap indices. Now off to the sectors. Where were the selling, or where was the selling concentrated in today's session? And it's not great for the bulls. It's concentrated in financials, down 2%, technology down just over 2%, and the consumer discretionary XLY, and in large part that's Home Depot and other discretionary names. That actually does include Tesla. Tesla was down 5% in today's session. And industrials, that's the brunt of the selling. We call these the offensive or the bullish sectors. That's roughly speaking financials, tech, and discretionary. If these are down the most, that is a bad sign for bulls. And on the other side, the strongest sector, strongest would be the ones that didn't go down as much, was the energy sector. And behind that was consumer staples. You'd expect that because it is a consumer staples or a defensive type of a sector. Healthcare and utilities off over 1.5. But the selling was across the board, not a lot of green or bullish spaces. And the big one, again, Home Depot. The way the Dow is calculated, when Home Depot falls by $1, it pulls 7 points off the Dow Jones. Home Depot didn't just fall by $1, it fell. When it was all said and done, we'll pull it to our 1 minute chart. Home Depot fell $22. So 22 times 7, it's our Dow multiplier, is about 150 points straight off the Dow due to one stock. That's Home Depot, not to mention the other stocks in the Dow. And to see how the individual stocks pull to the Dow, we'll just go over here, we'll detach, we'll take a look at this and how to scan or sort, or at least look at how each stock can impact the Dow. We'll go to public, we'll go down to the Dow Jones. When we're talking about the S&P 500 and the Nasdaq, percent change does matter, but not in the Dow. It is a point total, so each stock has an equal chance to pull down the Dow. So we'll go to net change to look at this just on a quick basis. Net change in the Dow. And that will be your intraday change and how that affects the index. So which stocks pull the Dow down the most? There is, we knew it, Home Depot, but behind that was $7. Almost 50 points was pulled down out of the Dow from UNH. Similarly, 50 points was pulled out of the Dow by Goldman Sachs. 50 points was pulled out of the Dow by Caterpillar. And fewer than that, 40 or so points pulled out by Boeing, and down the list. Remember, the Dow points is roughly 7 or so multiplied by each dollar. So that's an easier way to look at that in terms of point totals. Nevertheless, all markets were down roughly 2%. Again, that Russell had the biggest brunt of the selling. Earnings coming up. We'll have Nvidia. Nvidia will take place tomorrow after the bell. And a quick peek at Nvidia shares. Back to the daily chart here. It's had a decent run, decent rally from its September low. Almost doubled in terms of share performance, low to high. Now, where are the implied volatility stats? 108% at this moment. Implied volatility gives it a $1 or $16 up or down expected move. And as always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for February 21st, 2023.